Welcome to the next episode of The Compass. My name is Derek McPherson. I'm the executive chairman of Olive Resource Capital. And with me, as always, is Sam Pelez, President, CEO, and CIO of Olive. This episode, we're kind of going to venture into the comments that we've gotten on some of our episodes. And I think in particular, we got a question about silver. People asked us to evaluate silver miners, some particular names. We'll get into the details on those because we didn't know some of them, but I think what we'll do is get into the nature of the silver market, what we think of silver miners, etc.
I think it's silver as a subject is pretty timely, not just because people have been commenting about the sector in the comments to our clips, but also what's happened in the silver market over the last 2 weeks, including today, the day we're recording. We have some really interesting news in that sector. Eric Sprott made a podcast last week that was pretty widely disseminated also on this space, on the silver market, with some really interesting comments. So we're going to kind of pick up from there and give our views on the market and how investable it is, which parts of it are investable, and just overall what we see going forward.
I think that's a good point. I mean, generally speaking, the last time we had a bit of a bull run in silver, a big run in silver was, I want to say 2020, 2021. In that time frame, that was, what you saw in that market is Mr. Sprott and starting to invest early, and then all that kind of led to the bull market, and we certainly will, on timing metals markets, Eric is very good. I guess maybe let's delve into those two transactions. We're recording on October 9th. So there was one this morning, which was a transaction that Eric did with Mr. Sprott did with America's Gold and Silver Corp. So kind of an interesting one because in the downturn of the market, Eric bought a direct project interest in one of America Gold and Silver's projects, which is Galena, and now they're sort of unwinding that transaction. Now the market's it is up a bit, so Eric's effectively trading his project interest for shares in it, and so it's interesting. I don't know. Say I probably a valuation thing is this from a timing perspective, but I don't know. You have any? I mean, it did get announced about 3 hours ago, so we haven't done a huge deep dive onto it.
Yeah, it's still pretty fresh, but I think what you mentioned is the big take is who is doing the deal, and what the timing is. For this deal, I think is the most important part rather than the valuation. Or there's a new management team coming in, Paul Hewitt, who we know from previous dealings. But I think the important thing is how this can act as a catalyst for the silver space as a whole and what's coming next. On top of this, we had just last week, I think it was Thursday last week, the takeout of Silvercrest by Core. Now, this is, Silvercrest obviously one of the few junior companies out there that actually had, I think it's 100% exposure to silver. Correct me if I'm wrong, Derek. But
no, it's a silver gold. It's a silver gold. That's a silver gold deposit, but it is pure play precious metals. Most silver miners aren't. We'll get into that. It was majority silver. It is a silver miner, I guess.
Right. So these type of companies are very scarce. Out of the swath of juniors that we have evaluated, there are very few that have these characteristics. And compounding of that M&A team, the M&A theme that we've been discussing since the summer, this just kind of reinforces our view that this leg up in the market is real, and that we're still in the early innings of it. Like the valuation multiples and the capital flow downward to the juniors is only just starting, which is obviously a very positive thing. So I guess we decided to do this video on silver based on those two transactions, and just the fact that it appears poised to break out from a technical level as a commodity. But more importantly, there are dynamics in this market that are very specific and very different to those of gold and other PGM metals. So we think it's a good opportunity to delve into those specifics and then discuss investment opportunities in the space.
Yeah, silver's I mean, that's a good point. I mean, I think it is timely. I think silver is about to break out. You look at the charts, you look at the silver gold ratio, et cetera. And we'll talk about all those things. The silver market in itself is really interesting, and um, it is so silver sort of is a spread between it's kind of partially a monetary metal and partially an industrial commodity, right? If you look at platinum, palladium, they're more pure industrial commodities with a little bit of maybe monetary value in it. Copper would be pure industrial, et cetera. But silver's kind of bridges that gap, which is different. And so what ends up happening is when you really get significant moves in the silver price, it's generally when there's that monetary investor demand, for lack of a better description, and that's when the gold silver ratio collapses, and we see this move in the silver price. Generally occurs with in conjunction with a move in the gold price. Oddly enough,
Yeah, so that is sort of to say that silver is sort of a levered play on the precious metals. So when we have a precious metals market, typically silver outperforms after gold has run. We all know that gold's up something like 50% of the last 2 years. Silver is not up anywhere near that. And if we're going to show the gold to silver ratio soon, but typically it's towards the second part of the precious metals bull market that silver takes off and corrects the ratio, which becomes a levered play on gold effectively and on the commodities market or the precious metals market. We are by definition and by no means anywhere near into that space yet. Hence the opportunity set in front of us, and the reason for making this clip.
The other thing that sort of exaggerates silver's moves, though, and it is on the supply side, right? So you have this leverage on the demand side, right? All of a sudden, when people are looking for that monetary metal exposure, especially later as after gold is run, silver becomes attractive. But the second side is the supply side, and supply side of silver is really interesting because the largest, we were looking this up ahead of this episode. Like if you look at the 10 largest silver mines in the world, half of them are actually copper mines, and that's the case for a lot of silver production. So silver is a significant byproduct commodity, and so what happens with byproduct commodities is that one of the bigger silver mines in the world is Antamina, which is a massive copper mine, one of the biggest copper mines in the world. And so what happens with that is, I can tell you that they're not scaling back production of silver at Antamina based on what the silver price is doing.
We're up. Scaling down or up, yeah.
Yeah, they're operating that mine based on the copper price, but they're producing a significant amount of silver. And so when that happens, is that you get what that creates is more extreme moves. It's why the silver investment opportunity is so attractive and why it has that leverage over the gold price. And so I think that is something that makes the market interesting, and it's why there is this. We were joking about it before we started recording, but there are silver bugs, and when silver moves, there's an opportunity to make a lot of money very quickly because the moves are extreme. Now, as with all things with leverage, the move up and the move down are both extreme. So you can and that's what makes this kind of interesting. And then our view of the world would be, and we'll get into it a little bit later, but silver is a trade, not a investment.
An investment through the cycle. If you hold your silver through the cycle, it's going to be very painful. Hence, when you want to invest in silver, timing is the most important part. Hence why we're bringing up the Eric Sprott transaction that just happened today or this morning as evidence that and the technical chart on the commodity as evidence that this may be the time to start looking at it. And again, this is just for records. This is not investment advice. This is just what we're thinking internally and ourselves. All the elements seem to be aligning to dictate that silver could go on a run starting now and next year and for the foreseeable future. And some of the big players in the space, as you can see, are already positioning for that.
Eric Sprott has made his fortune timing metals markets and being very good at it. And so I think that's something that when he starts investing and starts being visible investing, I think it's something that's something we should all be paying attention to. One of those elements that kind of points to a move in silver is the gold silver ratio and where it's trading right now. We went back and did some work historically. If you look back, 1975 is effectively when both gold and silver gold became free trading, and consequently the gold silver ratio actually mattered. If you look at that history puts us at 63-1. So for every an ounce of silver is worth 63 ounces of silver equates to an ounce of gold. Now the market dynamics have changed, particularly because of the creation of ETFs, and how people invest in silver and how they get leverage, and then how things are monetized. Additionally, silver has become, over the last particularly 10 years, silver has become a lot more of an industrial commodity. And so particularly with respect to solar panels on it. And so, I don't know if that 60-1 is the right ratio, but you can see from this chart, you have, you get everything, while 63-1 is the sort of the average, everything we've seen everything from, 115, which was, that was COVID, to, to 30, right? Those are the extreme moves.
Yeah. And maybe for the benefit of people who are not watching the screen, what we've got on the screen is the gold silver ratio chart going back to 1975, and generally is on an upward trending trajectory. Currently, it sits at 83 or thereabouts. So the price of gold is about 83 times larger than the price of silver, ounce to ounce. And the all-time average, based on this chart, it's around 62.7. So just for a reversion to the mean on this ratio, it means that, effectively we keep the gold price where it is. The silver price would be, I actually did this before, but if we take 2,700 and divide by 63, the price would be about $43 an ounce of silver if it just reverted to the mean on the current gold price. But more importantly, that's the average or the mean. But what you see on the chart is that it actually overshoots to both sides. There are extremes on both sides. So if it were to overshoot favorably to silver, it could be substantially higher than that. So I think the importance of showing the chart is that we are generally on the extreme, on the upper end of the extreme, where silver is undervalued relative to gold. And this is just to illustrate how it could reverse and favor silver, which could lead to a material outperformance of silver to gold.
Right. And we're not saying that and reversion to the mean is not necessarily something that you want to use as an investment case per se, but it is certainly something that is positive. And obviously the point here is that it actually doesn't, as Sam said, it doesn't revert to the mean, it overshoots. I think probably the ratio that's a lot more meaningful is the last 10 years, or last 15 years, which we did the average since 2010, and that's about 73-1. I think 70-1 is probably the number that you kind of look for as a target for where it could hit. Now, keep in mind, these ratios can move two ways. They also move the gold price going down and the silver price holding steady. But even in that case, you're benefiting, you're outperforming on silver. But when that move happens, right, and I think this kind of gets into where we're going with this, right? Next thing we're going to talk about is silver miners. Well, the one thing, silver miners are a unique thing in and of themselves, because generally as we said kind of at the beginning, the majority of silver is a byproduct. And then when you go look at the actual silver miners, and oddly enough, the ones that show the highest beta to the silver price, they're not actually silver miners. And so
they were silver miners.
They were for 100 years they were, and then recently they haven't. So there's one thing that is sort of when you start looking at silver mines in that ratio, pure play silver mines are very rare. Oftentimes they're generally silver gold, where you have a dominance of silver that makes it a silver mine, kind of like what Silvercrest was, or Aya Silver as an example is another one that has that same that's it, I think. Or the base metal mines. They're a lead zinc mine that has a significant, a meaningful silver
Byproduct silver.
byproduct silver, where you could say the majority of the revenue is silver, and so on. Hence, it's a silver mine. But they also have those other credits. The thing is that silver mines, pure play silver mines, are generally on the smaller side. They're generally smaller than their gold. They're big, I guess, big brother cousin. They're big brothers in the gold space, right? The gold assets tend to be larger. So there's a scarcity of silver assets that can be supported, that can support a public company, and the consequence of that is that when silver is on the lower side, and that number's moved up in recent years, but generally between $20 and $25 silver, a lot of these silver miners, the pure play silver miners, don't make money, and that's which isn't that far from here, from where we are now, around 30. But if you take that same, but as soon as the silver price starts to move, all of a sudden these silver miners, they have incredible leverage. So, and the one thing that that I've done in the past, and Sam, you've done it, we've had these conversations about it with silver miners, is that if you take a silver mine and you compare it to the equivalent gold mine, every time you will buy the gold mine, from a quality perspective, from a size, from a grade, from a margin. And the reason is that on a valuation perspective, there are a lot fewer of the silver mines, so there's a scarcity value to them. And so they tend to trade at premium multiples relative to their gold peers, which is partially mind-blowing when you think about it from a pure technical perspective or financial perspective on those assets. But there's a scarcity value to those projects. And consequently, because there is a scarcity value, you get this premium multiple. But then, and the reason you get the premium multiple is because when the silver price moves, you get this significant outperformance, because your EBITDA goes from being very small to very large very quickly, and it's pure profit on the expansion. Your profit increases in multiples, and so then hence it attracts capital, because they see that growth trajectory. It's really interesting. And then obviously you have your silver developers and your silver producers, and again, it's the same for both of them, right? You have this incredible scarcity of large scale silver assets that could support a public company, and the consequence of that is that you get a lot of silver miners that the silver developers trade at a premium relative to their gold peers.
So I want to go back to the point where you're comparing sort of silver mine to a gold mine. And just to put it in context, like one of the better or best development projects over the last decade was Juanicipio. That's the Fresnillo and Mag Silver project. Currently, that mine is producing about, last time they reported, it was 5 million ounces of silver. And if you multiply that by 4 to annualize it, it's about 20. If you divide 20 million by the 63 average that we were talking about on the gold ratio, forget about the 83 today, just multiply by the all-time average of 63, that's just over 300,000 ounces of gold equivalent. And I'm saying just because this is one of the larger, I think it's, we looked at these last couple of days, I think it's the number 4th largest silver mine in the world.
It's a top 10 silver mine in the world. And
it's certainly a top 10. I can't remember exactly the position where it is, but yes. So to put it in context, a 300,000 ounce mine equivalent gets you in the top 10. Yeah, go ahead.
Yeah. So I think actually, Sam, it's the largest, what we consider a pure or a majority silver mine, right? The other ones ahead of it are base metal mines. But yeah, no, I think, sorry, I interrupted you on your point, but your point is, okay, 300,000 ounce of your gold mine doesn't crest the top 10.
It's not tier 1.
Yeah, it wouldn't be considered.
So a pure tier 1 silver project, primary silver project, gets you 300,000 ounces of roughly, something around there. So that's to say that it's too small. The primary silver market is too small a market for big players. Hence why the Heclas and the Pan Americans that were the long-term silver miners that we used to adhere to ended up diversifying into gold, because they run out of expansion opportunities. Which means that now that we may be looking at a new silver market, we need to start looking at new players, because yes, these companies have significant silver production, but they're no longer primary silver producing companies. And I think that's the point that we were trying to articulate as to what the investment opportunities are going to look like this cycle.
Yeah, I think that's that's the key point, is that your traditional silver miners. So your traditional silver miners, when silver is moving, and silver is a very it's a very U.S. trend. U.S. investors tend to chase silver, and the three sort of biggest silver companies, and I'm using quotes on that because I think it's appropriate, are Pan American, Coeur, and Hecla. That you consider be sort of pure play. I mean, well, you got Bonaventura and Peñoles as well, or sorry, and Fresnillo. Peñoles is a broader miner, but you've got those ones. But like the ones that are U.S. listed, or the keys are and U.S. targets. But if you look at Coeur and Hecla and Pan American, they're really not. They have silver exposure and above average silver exposure for precious metals producers, but they're certainly not silver companies anymore. But if you go back over history, even the last 5 or 6 years, and you look at beta to the silver price, those stocks have some of the strongest beta. And so the one thing that, that is interesting, and the one thing that is challenging in this market, is how do you get that exposure, right? Because what you're really after, if it's a trade and not an investment, right? And there are investable silver companies. I mean, we would call investment. So you'd hold long-term because there's growth prospect, et cetera. I think obviously, the example that comes to mind that was taken out, and, is Silvercrest, and that was Silvercrest 2.0. That management team did it once before. If there's a Silvercrest 3.0, I'm pretty sure that it's got as much money as it wants, and no matter what the cycle is, right? So I think that's there are examples that make sense. I think there are some really high quality developers out there that have that same potential. Now they're valued at a premium relative to their gold peers, but you could maintain that they're equivalent gold peers, but there is that attractive trade. But if you're looking at it as kind of we are, and saying, okay, we're not going to hold silver, we're not going to. We'll invest in silver when the time is right, but generally not going to hold it through the cycle because it doesn't make sense relative to some of the other opportunities that we have across the whole space. Then you go, okay, well, how do you get that beta? And let's assume that because we're not, we're not Eric Sprott or Mr. Sprott, and we can't take a shotgun approach to it. We have to be a little more precise and a little more accurate on how we do it. How do you get that exposure? And the issue is, and part of the challenge is that the companies that have the best beta to the silver price are typically not don't on a true financial basis don't have as much exposure to the silver. We've done the work. If you take the silver price and plot like Coeur and Hecla and Bonaventura against it, you'll get a reasonable looking chart. Now, the problem is that right now, of your silver producers, so if you look at sort of roughly year to date, silver is up about 40%. And then if you look at some of the what we would consider the typical beta producers, Coeur is up 161%, although probably not attractive entry point now because of the transaction with Silvercrest. That's going to mute any beta to the silver price. I is up 140% already. So, again, pure silver producer, large scale, liquid, great opportunity. But then you go, okay, the next level down, you got Hecla at 60%. Hecla hasn't bought anything yet. Bonaventura is up 60%, hasn't bought anything yet in this cycle. The silver miners are only up 43%. So we haven't actually seen that leveraged outperformance that you kind of expect. And obviously you have Pan America at 43%, but I mean, interestingly enough, in this chart, Pan American's in gold, and that's probably, post the transaction with Yamada, they're probably more of a gold company. And then if you look at like, okay, let's pick some of you got MAG, we talked about, which is that their exposure to Juanicipio, they're actually underperforming the silver price. And you've got at 38% or roughly in line. And then you've got First Majestic, which is AG on this chart, which is often a bit of a go-to name on the trade, is actually materially underperforming, down 20%. You got Fresnillo down up 20%, which is, on underperformance by 20% relative to the silver price, and Fresnillo's down. So as well are underperforming. And so I think that there's, now maybe, I mean, we're seeing the same thing in the gold space too, where the miners are underperforming the metal. But I think you're going to get, or not materially outperforming the metal like they should. But I think, if you look at, I mean, I guess there's two parts to this, right? One, if you look at this package of and again, I'm gonna put silver miners on that. If you look at this package of silver miners, there is a opportunity for this to be, for these things to run and outperform, and particularly if you pick right. But I mean, as an example, so the one company here that I would look at and kind of say, okay, I want silver beta would be Hecla. No one's, Hecla's going through a management change right now, so there's obviously some risk and concern that's associated with that. There is you have with Hecla, they don't really have a lot of pure play silver exposure, or they have less pure play silver exposure than some of the much smaller miners, like a Silvercrest would have had, or a Guanajuato Silver, or some of the other smaller Mexican miners. But I would put good money on them outperforming on the silver price, because people treat it like a silver miner, right? The investors will buy it. This is certainly an investment advice, and I don't think we're gonna be jumping in to buy Hecla, but it's more the talking point of you don't actually need the silver exposure. You need the appearance of silver exposure, I guess, is the point.
But the thing is, when I look at this chart and all these comparables here, Core is in the middle of a transaction. It's already run. It's in the middle of a transaction. In my view, that makes it uninvestable for now until the transaction closes. Because then obviously the ARBs are playing their games for the next 60 days until that transaction closes. Aya, which I have to admit, like the land package that they've got, being one of the first movers into a new country, it's quite exciting. But the valuation seems a little bit stretched for my liking. I'm not saying it's going to go down. I'm just saying that maybe perhaps we missed the move on that one. The next one is Hecla, which, like you were saying, they haven't bought anything, but their closest peer, which is Core, just did. I don't know if that puts them into the position where they're the next ones to buy something, which obviously you don't want to be a holder of something that goes out and pays a premium for something because it erodes your value. So you start going from the top to the bottom, and you start sort of, okay, well, what else can we buy? Buenaventura is really a copper company that has a really good silver asset, but it's really more of a copper play. Pan American, maybe the way to play that is those subscription rights that trade OTC on the potential restart of Escobal. That's a more alternative strategy. But as we start going down, we kind of start getting into MAG and Fresnillo. They have the largest primary silver mine in the world together, and they haven't received the appreciation for it so far. And it's in the middle of I don't know if it's in the middle of the ramp up, maybe later stages of the ramp up, but that ramp up seems to be going well. So if I look at this screen, that's kind of where my eyes go to in terms of opportunity. We didn't mention in the beginning, but First Majestic is in the middle of the acquisition of Gato Silver as well. So that's gonna weigh on the stock temporarily as well. Plus, they have the issues at Jared Canyon that's 2023 news, but it's still hanging over their heads. So when looking at this, I just see MAG and Fresnillo as just clear opportunities in the producing space to participate in this rally in the silver market that we're expecting to materialize.
Now, Sam, we talked about, and this is probably something that's maybe a little more of a fine detail, but I think it's something that we should talk about. We talked about this yesterday or the day before, when we were kind of looking at this chart and putting this together, was where stocks trade and then how investors react. So if you're looking at example MAG and Fresnillo, I think that was a point you brought up. And we would, I think we prefer MAG, but maybe you want to explain why.
Well, one of the biggest things is MAG trades in New York, where the biggest retail buyers of silver are. Biggest retail buyers of silver and silver equities are in the United States. Fresnillo trades in London. And the majority, in my experience, the majority of Americans don't like to buy things outside of their market. They just don't. They're just not used to it, right? Hence why some of the stories that trade in the U.S. carry premiums to themselves. And if you look at Fresnillo and MAG trades about twice the multiple as Fresnillo. So I think if you are a large cap, or not large cap, but an investor with substantial capital and patience, you may be better off buying Fresnillo through the end, and maybe you don't get the same alpha that you get with MAG, but it's a much larger company. Although I have to do say that Fresnillo is majority owned by Peñoles, so the float is not that large. But yes, these are all kind of like off-market, non-silver considerations that you have to keep in mind when you're picking an investment. Just for people who don't know, like MAG and Fresnillo share the ownership of Juanicipio. Fresnillo being the operator that has just over 50%, I think it's 56, and MAG owns the remainder, so 44. But MAG is effectively it's not a passive interest per se, but if you look at the financials, they don't report revenue; they just report the equity interest in the mine, which it's a little bit weird, but they do have that significant exposure, and they have some other interesting exploration and development assets in the U.S., predominantly in the Tintic camp in Utah, which has produced substantial amounts of silver in the past. But I think that's besides the point of what we're looking at right here.
The one thing I would say, and I think this is the point, and potentially part of the underperformance we've seen in MAG relative to, say, a Core or a Hecla, is on a margin basis. Juanicipio is not just one of the largest silver mines in the world; it's also one of the lowest costs. It is from in the silver space, it would be a tier one asset, and so I think that is that's something that you probably, that's part of the reason it hasn't performed as well as some of the other producers, because it isn't as liquid. And so, I mean, there is, we've talked about we were talking about here about the largest producers that are out there, but, I think that there are some smaller names that have a lot of torque as well. But of course, you're taking on single asset risk. A lot of them are in Mexico, which has its own particular challenges right now, although that seems to be getting better as well. And so, I guess that's kind of where we're at. I guess, circling, full circle back, maybe let's talk about some of the names that we're own, or we have been that we have in silver.
So sorry, I just Googled this because I wanted to get it right. So Juanicipio is producing roughly 20 million ounces of silver, per year. Core Mining produces 10 million ounces of silver. So they, other than the gold, it produces 300,000 ounces of gold or thereabouts. But MAG alone, their carry on the Juanicipio mine is equivalent to Core's entire silver production. That's pre this SilverCrest acquisition. But it's the market is so small that even the larger players, sometimes it's shocking how small their production is when you compare it to gold. Sorry, moving on to the other names.
Yeah, absolutely. So this is, I guess, to think about this, there was a period, I want to say, about a year and a half ago, where we had this same discussion about silver. We produced this chart with all the squiggly lines on it, and the two of us came to the conclusion that the right thing to buy on the silver market was the SIL. I don't think that's where we are. SIL, which is being the Silver Miners Index. I think anything that you buy, generally speaking, if it's a producer and you're looking for that beta, you want to make sure that it is in the SIL, because that's where generalists will go to get their silver exposure. They're probably not going to buy the individual, less likely to buy the individual companies. I think, we've talked about it. We're talking about it. I don't know if we have a significant position yet, but MAG is certainly one that we are looking at. I talked enough about it to kind of give that away, I think. And then on the producer side, we have exposure to Guanajuato Silver. That is definitely a torqued leverage producer. I've known James for a long time, so I have a trust with management there. But it's got both operational leverage and balance sheet leverage. But it's consolidating. It's a small silver producer. I think it's ramping up to 3 million ounces of silver a year. So relative to some of those other numbers, that's good. The other thing we have, which is a little bit unique, is it is in the SIL, or has the potential to be in the SIL, is we have, which gives us a little bit of silver exposure, is Sailfish Royalties. We have a convert some equity in that. And that is, they are in the SIL, and the reason is that they're one of their streams, one of the streams of royalties on Mako's is on the silver production. They have a call on the silver, so they have silver revenue, and then consequently end up in the SIL. So those are sort of the, I mean, I would say allow larger cap, but those are some of the ways we're playing the silver market.
We haven't talked about. We've got some questions on the silver developers, the pre-production companies, and frankly, we are currently not looking at those, but for a particular reason, and the reason is that we have invested in a private silver developer with an asset in Alaska. So, in our mind, we have that basket full, and so we don't want to overplay our hand on that early stage yet, especially considering that we have this for our size, a sizable exposure to this private. I don't know how much of it you want to how much you want to talk about it, Derek.
Well, it's one we disclose, right? So we have it's a company called Silver 47. Its chairman and CEO is Gary Thompson, who I'm connected with through my other gig, which is Gold 79. We've been shareholders for a while, and obviously they acquired that asset in Alaska after some challenges in the Yukon, and have actually, are going to come to market here shortly with a sizable resource and a drill program and a summer drill program with some results pending. So I think that one is very it's interesting and torquey, and it's got all the right investors. It's got all the right investors in it as well for a silver name.
And just for context, this is an Alaska project. Has an existing resource. It's near Fairbanks, near Kinross's Fort Knox and Northern Star's Pogo. So certainly a mining-friendly jurisdiction, mining-friendly part of Alaska. And it's post-discovery, which is something that, especially in silver, we're looking for. And I think the plan is for this company to be public before year end or something like that. So I think so far we've been it's working out for us in terms of we got in on the early private rounds, and it seems to be ready to come public with a resource in a good part of the world, just as the market is heating up. So that's what we're excited about.
Yeah, and I think the other thing to think about with that one, what part of the value proposition from our perspective is that it had a sizable JORC compliant resource. The asset did. Obviously, to go public in Canada, they had to turn that back into a 43-101. And the result of that was a decrease, a loss of ounces. And I say a loss of ounces in the sense that they weren't 43-101 compliant. And so there's an opportunity there for Silver 47 to materially grow that resource with some targeted drilling and get those JORC ounces bounces back. So definitely something definitely a potential opportunity and something to look for coming public. That's one of the advantages of the structure of Olive, is that we get to see opportunities at very early stages that potentially the general public doesn't see, and so we take advantage of them when we can and when we think that there's an opportunity. So I think with that concludes the silver episode of the Compass. Thank you very much, everyone. Appreciate your feedback. Appreciate your comments. And I think one of the next items we're probably going to tackle is, which is also in the news, is political risk, which will be equally fun, I guess, as we go through this.
We're going to have to do more of these because we didn't get to a lot of the companies that people have been asking about. So maybe we'll do an episode just to give our opinion on some of the names that people have put in the comments. Please continue to put those down there. Let us know what you think about our picks in silver and what are your picks. And maybe we'll, after political risk and after dilution, because there's an episode on dilution that we're anxious to put out, we'll tackle sort of a review of people's investment ideas and where we see them and whether we would be interested in investing or not.
I think it's more of me ranting on dilution, but it will be an episode. Yeah, and I think there was, I think from the comments, there's also, there were some questions about some leverage gold plays. Some names, there's a group of names that would be leverage gold plays. So I think we'd want to do that one as well. So anyways, for always happy to talk about a topic. If it's, if you have a suggestion in mining, or in resources in general, feel free to reach out. If we think we can talk intelligently about it, we'll give it a shot. Thank you, everyone.